Hi everyone, I'm the BTS Trader, and yes, this is my favorite sweatshirt. I backtest market data to help you make better trading decisions. Today we're going to look at why looking at the VIX is really important if you're going to trade the S&P 500. But before we begin, please hit that like and subscribe button. Once again, we're back in multi-charts. First, we're going to look at the Bollinger Band strategy that I previously did a video on. If you haven't seen that, please check that out. But this time, so in the last video, we saw that actually the Bollinger Band strategy on the SPY, the best time frame was actually around 60 to 70 minutes. And that 30 minutes, which is what this chart is now, didn't perform very well. So I'll show you the actual strategy performance using the 30-minute chart so you can see how the VIX can help us improve this. So let's go through the performance. So once again, this is about 10 years worth of data. This strategy goes only long because going short in the SPY is very difficult. So it produced 15,000 in net profit. 71% of the trades were profitable. Total number of 414 trades. Max strategy drawdown was 9,500-ish. Looks like the performance ratios, so annualized Sharpe ratio is negative, so that's obviously not good. Anything, I'm sure there's different opinions, but anything over positive 0.5 is considered good, usually, for most people. Time analysis, you're in the market about 50% of the time. And here's the equity curve. So, it's okay in the sense that it's going from left to bottom left to top right, but as we saw before, the performance ratio isn't, the Sharpe ratio isn't very good. Trade analysis. Average trade is 37.75. Definitely would like to see that higher, generally speaking. And you can see it's actually generally profitable, but like if you're comparing this to kind of a buy and hold, there's not much of a benefit, especially since you have that negative Sharpe ratio. You didn't really lower your risk at all following the strategy. But you can see break-even year, 2 years that are definitely losers, and then, it's not a terrible strategy, but it's not a good strategy. It's not something you could trade. Okay, so here in this strategy, I added the VIX, doing two different things. So down here is the VIX. It's also running on a 30-minute chart. But, in reality, you could actually change this time frame to look at 60 or even faster or whatever. But we're just going to keep it simple for this one. So the only thing that I did different was add two rules. One rule is that when it looks for the sell signal, so if just a reminder, the sell signal, the rule for the sell signal is that hold on, let's zoom in. So the original rule is if the VIX crosses under the upper band, it would sell at market. But this strategy looks at the VIX by looking at if VIX is not higher than X amount of periods. In this case, I tested out to be 6. So if the VIX is not higher than the last 6 periods, it does not sell. It only sells if VIX is higher than the last 6 periods. The other rule that I added was that, let's reset that, was that it does not trade if the VIX is over, in this case, 50. And as you can guess, 50 is pretty lenient. But that's what it back tested. Maybe in algorithmic trading, it could be considered overfitting. But for this test, it showed that if we don't trade when the VIX is over 50, we have substantial improvement. So I'll show you right now what the strategy performance report looks like now. But so this looks good already, but let's just start from the top. So let's start from the top again. So same time period, 30 minutes like last time, but adding these two rules for the VIX, you can see we went from basically double the net income. The percent profitable is around the same. Total number of trades is less, which, you know, it's usually you do want a system to trade a lot, and you want more back data obviously too. So that part is good and bad in the sense that you could make more with less trades, but at the same time the sample size is low, so it's hard to say, right? But here also our strategy drawdown is $6,000, which I'm pretty sure was less than the last one. Our performance ratio, there we go, we're finally positive, 0.26. Not at that 0.5 that I mentioned earlier, but at least it's not negative, so that is definitely a significant improvement. And you can see this equity curve, I mean bottom left to top right, but you can see it's a lot smoother. And I didn't show this on the last report, but in that last report, you would see that this was this was the March 2020. You would see this a lot deeper, but that's because that one rule of looking at the VIX, like you do not trade if the VIX is over 50. You can see it basically kind of closed down the system when it's saying, okay, it's too volatile to trade the S&P right now. So total trade analysis. So average trade is $335. As you can guess, it's definitely much higher because we have a lot less trades and the net income is a lot more. Let's see, our average losing trade 651, average winning trade around the same. So at least, I mean, like I said, this is not a complete system. I didn't say it yet, but this, please trust me, this is not a complete system. As I said at the beginning of the video, this video is just to show you how adding the VIX to your S&P trading strategy could help improve a strategy. What I'm showing you here is not the strategy you should use. I'm just trying to make a point using 10 years of data that using the VIX can help you improve your strategy, whatever that strategy may be. Okay, so we'll go into the annual period analysis. Now you can see that we actually only have one losing year, well, let's call it, and these, I believe these might have been negative the last time, but at least they're really just definitely break even. But yeah, I mean, you can definitely see we definitely have less trades. I mean, only 7 trades, but the percent profitability is decently high. I mean, there are definitely some years where, I mean, this 33%, this system is definitely not performing, but at least you're not losing. This one, you're definitely losing. Okay, quickly, I just want to show you what happened during the March 2020, or how this strategy handled the March 2020. So it did enter long here, and it did suffer this little drawdown, but nothing compared. Usually, I believe the original system, you were losing to around here, possibly. But you know, it hit, the VIX hit over 50 right around here, and it just shut down the system pretty much completely. And 50, like I mentioned, is very generous. I mean, very, very generous, I would say. But I mean, that's actually what the back test said to do, because if you shut it off before that, you would, I believe you're possibly losing money at that point, or you're not making as much money as you could. So there you go. You can see why studying the VIX is really important if you're going to trade the S&P 500. It helped us take an underperforming strategy and helped us improve it quite a bit. Not only did it help us stay in a trade longer, but it also helped us stay out of the market when times are a little bit too volatile to trade. So that's it for this video. Please hit the like and subscribe button, and I'll see you next time.